Anish Damania now joins us. He is Head of Institutional Equities with Emkay Global Financial Services. Anish, I guess my introduction was the question in itself. When we started the year, things were looking rather hunky-dory for Indian markets, but 6 weeks into trade this year, things have reversed.
You see, the FI flow still continues. So in this sense, it seems that they are doing an SIP of a kind, 1,000 crores every day, and they have brought in about $14.5 billion year to date. So FI flows continues, but the interesting part is that the domestic institutional investors are matching or sort of being very heavy sellers, and I've never seen such kind of heavy selling coming from the domestic institutions. A few of the clients whom I spoke to on the FI side who manage emerging markets, and they have turned around and told me that, Anish, look, it seems that the domestics are selling and India is looking less brighter than the rest of the emerging markets, given that it's run up, a lot of flows have already come in. So whilst flows will continue to come in, a larger part of the flows could be driven to other markets. So he is happy selling, getting out of India. He invested about 8-9 months ago and now putting money in other emerging markets, pulling out of India. So to some extent, some of these emerging market guys may have started pulling out, but the ETF flows continues, probably ETF flows continues to be pretty strong.
Anish, I'm wondering, do you think some bit of cautiousness is also pre-budgetary in terms of what may or may not come around on 28th of February?
I doubt if it is a budget effect, but what I sense is that when I was looking at the numbers, in the last, what the stocks in the BSE 500, nearly 50% of the stocks are down by more than 15%, 15%. From their peak, and in the Nifty, nearly 40% of the stocks are down more than 10% from their near peak. So probably what I sense here is some amount of profit booking to a great extent because the mid-cap indices have started underperforming the Nifty now. People are shifting away from the mid-cap indices, and that's why you are seeing a lot of selling down in the mid-cap counter. So the breadth of the market has reduced considerably.
Anish, what explains this consistent bout of selling in the mid-cap space, and do you think the pain in the mid-cap space is here to stay?
Yes, for some more time, yes, because if I were to look at the earnings, then mid-caps have still not shown that great earnings growth in the recent results as well as in the previous results. So from that point of view, there is a issue with respect to earnings growth at mid-caps. So till the time you see probably a couple of quarters of good robust earnings growth, people will really think twice before entering a mid-cap name.
Let's discuss the pharma newsmakers, Sun Pharma and Cipla. For Sun Pharma, the fact that they want to keep Taro as a listed entity and they will not make it public. How will that change things for Sun Pharma? And Cipla, like you heard from Darshan, that they've decided to call off the MedPro merger. How will this change life for Cipla?
See, as far as Sun Pharma is concerned, I think they own 67% stake in Taro. So I would say that the incremental decision of not buying the additional stock has something to do with what kind of returns they would be looking at had they were to buy it at a higher price. I think it's a wise move, and this should not affect. In fact, it should actually bolster Sun Pharma's stock price. So the way I was looking at it, the results have been pretty decent for Sun Pharma, and among the very few pharma companies who have posted good numbers. So Sun Pharma should do well. On the other hand, Cipla has reported disappointing numbers, and in terms of this acquisition, though, I would say that if the company feels that this acquisition is expensive and they have put it on hold or they have called it off, it's going to be good in the longer term. Though I wouldn't know what other details of this acquisition were, so to that extent I won't be able to comment. However, on the standalone numbers which they have reported, we still see Cipla underperforming the benchmark index.
Anish, what are you expecting to hear out from ONGC this quarter, considering their subsidy burden is now touching 50,000 crore rupees? Do you think the stock price valuations are pricing this in?
See, our sense is that the way I would look at ONGC is it's a clear beneficiary of increased crude prices. So to that extent, and with the government raising the prices of diesel and petrol from time to time, is going to augur well for all these upstream and the downstream companies. So to that extent, I would say ONGC looks good. There has been a fair amount of stock which has got infused about some time ago into the market. So to that extent, there might be some profit booking after it touched about 350 or so. So I would still continue to be positive on ONGC.
Nish, what is the deal with Strides? Strides corrected. I would say it actually collapsed by more than 150 rupees last week.
No idea. I don't track that name at all.
You track Bajaj Auto. As a house, you've been bullish on Bajaj Auto, but Bajaj Auto also of late has come under intense pressure. It is evident that the domestic two-wheeler market is now going through a intense price competition. Which way do you think Bajaj Auto is headed in the near term?
I think we had been bullish on Bajaj Auto till the beginning of this year. So after that, we have kind of reduced our rating on Bajaj Auto, given the very strong stock performance which it had delivered, along with the earnings performance. So this year probably we'll see some more muted performance on the stock side from Bajaj Auto. However, versus that, we had kind of upgraded Hero Honda and said that, look, the concerns on Hero Honda are probably overdone and we need to look at this stock afresh now. However, that has not worked so far, but I would believe that the number one and number two positions keep on changing in these top two-wheeler companies, and probably in this year we feel that it will be Hero Honda's turn.
Anish, what is it that you're hoping to hear from JP Associates today?
I don't have a fix on numbers, but I think they should announce something on that. They should be giving some direction on what they're going to do about their stake in about selling their stake in that cement plant.
Markets disappointed because that was the talk of the town till about 3 months ago, till about a quarter ago. Nothing has transpired. First it was an Irish company, then it was AV Birla Group, then again it was an Irish company, and again AV Birla Group. The bottom line here is that the management has failed to sell majority stake in the cement business, and in fact, in order to meet the debt obligation, they're planning a QIP.
So if you look at the amount of money which they raised in the QIP is about $100 million, is about 550 crore rupees, nowhere close to what they would have expected on the stake sale, and very small in proportion to the gigantic debt which they owe. So I don't know why they did this QIP. Some call it desperate bid, but for me, it's kind of testing the market to see if they can raise some equity in this market. So I don't know what their experience has been. It doesn't come out that well, but the stock reaction shows that the experience has not been that great in raising equity. So the company probably is getting no choice but or left with no choice but to seriously think about selling its asset. And the last 3 months news flow on that has not been very encouraging. So I would like to look at the stock only when that deal happens, and till the time deal happens, probably I will want to avoid this stock.